Stocks trade range ahead of the FOMC meeting outcome tomorrow. Consumer durables and capital goods eke out some gains while IT and FMCG drag.
After Jio announced new postpaid plans to draw customers, Bharti Airtel too has launched new lower price plans to pull cost-conscious customers and migrate some prepaid users. Vodafone Idea could hurt most from these moves.
HDFC AMC rallies after GQG partners sell its stake. PVR2 perks up on Warburg Pincus making an exit, while UTI AMC gains after PPFAS buys a large block.
Sterling and Wilson Renewables, J. Kumar Infra Projects and PNC Infratech gain on winning fresh orders as the flow of contracts to power and infrastructure sectors continues.
GQG Partners CEO Rajiv Jain tells CNBC-TV18 that it would be a mistake for Adani to stop growing over investors' debt concerns. He says that Adani investments are based on a risk-reward assessment, and he doesn't see a contagion risk in the US banking crisis.
Hello and welcome to Halftime Report. I'm Sonal Bhutra and with me is Manglam Malu. Hey Manglam, good afternoon. Well, we've come up from the highs of the day. It's almost a 50-point downtick from the highs. So the Nifty high today was 17,086 and we are at 17,036. So still 50 points higher on the Nifty. But yes, there is some selling pressure that we are seeing from the top. The mid-cap side of things, they are underperforming the benchmark. That index is up 55 points. So yes, we continue to be in the green after what we saw as far as the global market moves are concerned. We did replicate some of them, but we'll have to see whether we sustain them or not, considering the pullback that we have seen in last couple of minutes itself. Of course, the big trigger is the outcome of the FOMC meet that we'll get tomorrow. Yes, that is what will add further to the volatility that we're already witnessing. But, you know, the playbook has been pretty similar. All lows closer to that sub 17,000 mark are being purchased and levels closer to that 17,100 mark are being sold into. So we continue to remain volatile in a range. The good part, however, is that the mid-cap index is, seeing broader market gains. It's seeing a bit of a spike from the lows. And at the same time, we have more stocks advancing than they are declining. But the last couple of days have been extremely rough for some of these sugar stocks. So, you know, the intraday charts of, rather a two-day chart of Balrampur Chini, Sri Renuka Sugars, Dwarikesh and Dhampur comes up for you on the screen. And this is as the country's sugar output remained marginally lower at 28.18 million tons till 15th March of the ongoing marketing year. Centrum Broking has revised downwards its sugar production estimate to 34 MMT, and they do expect a major uptick in prices by the end of March. Atul Chaturvedi, who's the chairman of Sri Renuka Sugars, joins us now. Thanks a lot, Mr. Chaturvedi, for joining in. Before we talk about sugar, I wanted your thoughts on ethanol itself. You've recently doubled your ethanol capacity. At the same time, wanted to understand, how correlated are crude prices to ethanol demand? Common sense would say that, if crude prices go lower, ethanol being a complementary product would also see lower demand because, crude decline would result in higher demand for crude. Would you concur with the same?
No, I really won't concur with that because India's petroleum or crude dependence on the world is almost something like 85% as of today. So the thrust on ethanol is largely to make us much more self-reliant as far as our petroleum requirement is concerned. And in fact, India is committed to zero carbon emissions by something like 2070. And the thrust from the government side is very, very strong. And I see no reason why the thrust should actually come down because whether we like it or not, as a producer, we are getting something like 65 rupees per liter as payment from the oil marketing companies. Whereas as a consumer, we are paying something like 105 to 110 rupees per liter. So there is no subsidy element involved. So that is the reason why we as a company are quite gung-ho on the ethanol expanding big time in the country.
We get that point. So can you tell us, you recently commissioned your distillery production capacity as well, as my colleague was asking. By when will this get commissioned? What are the additional revenues you're expecting? And what is the average margin that you make on a distillery?
In fact, when we took over this company way back in 2018, we decided that the way forward as far as our industry is concerned is ethanol. When we took this company, the capacity at that point of time was about 530 kiloliters per day, which now we have jacked up to about 1250. And the last capacity expansion is currently undergoing commercialization. And we hope next year we will get the full impact of the same. But having said that, even compared to last year, our ethanol production during the current year is higher by anywhere between 25 to 30%. So ethanol is definitely helping us ramp up our revenues, and it is also helping us get rid of excess sugar during the season itself, which improves our cash flows. So I think ethanol will continue to be our focus area going forward.
And what are the margins here? How much higher are they from the regular sugar business?
No, in fact, our regular sugar business comprises of quite a few things. We are also big time into exports. We have these export-based refineries at Kandla and Haldia. So export revenues are also growing at almost something like 40 to 50% this year. But as far as the milling side is concerned, milling side on an average, we get about 2,000 rupees per KL higher in the case of ethanol. So, but we also have a brand called Madhur, which fetches us more or less the same realization as what we are getting for ethanol.
All right. And how much is Madhur as a proportion of your overall sales?
Madhur at the moment, in fact, we are growing at about something like 20% per annum. And this year, out of about our volume should be closer to about 170,000 tons on an annualized basis this year, which would be about, I would say, 20% of our overall revenue from milling side.
Okay.
Okay. And what about, your sugar realizations? How are they likely to be for the fourth quarter? The same time last year were just shy of 34,500 per MT mark. Where do you see that settling in this quarter and say the next couple of quarters?
In fact, our take is that with the sugar production now likely to be closer to about 33 million tons and exports being about 6 million tons roughly. So we feel once the off-season starts, which is sometime in April, May, the sugar realization domestically should actually improve. I'm not too gung-ho on India exporting more than 6 million tons, which has already been committed and practically exported. But definitely the domestic market, which has been relatively subdued in the last few months, has the potential to improve and improve quite well.
So, Mr. Chaturvedi, when you're talking about how ethanol will be a big volume driver and margin driver for you as well, your brand Madhur has margins which are similar to ethanol as well. That also contributes a lot to your revenues. What does it mean in terms of, say, FY24 margins for you? In the financial year gone by, you were at 6%. FY21, you were at 10%. When will you get back to that double-digit number?
In fact, margins in the current year are also much better compared to what they were last year. In fact, what we are seeing is once our revenue growth is almost something like 40% in the current year, though the March closing is still not on. But definitely we anticipate that the revenue is going to be higher by about 40%. And our exports are also going to be pretty much higher by about anywhere between 30 to 35% compared to the previous year. So overall, at the EBITDA level, also we feel we are on right track, and EBITDA also is likely to be much higher than what it was last year. So overall, we are on reasonable track. But next year, I would say, I would much rather wait for how the things pan out in June, July, and how the crop shapes up. Then we'll make up our minds. But definitely, ethanol play should actually be higher by minimum 25 to 30% next year as well. This year, we would be supplying almost close to about 200 million liters to the oil marketing companies, which is higher by about 30% compared to the last year.
Right. And, just a final question to wrap things up. Your distillery capacity, which is currently at around 720 KLPD, increased to closer to 1250 KLPD. What does that increase entail in terms of higher revenues at optimum capacity?
No, definitely the revenues would definitely be higher. In fact, our revenue stream is both from the crushing, from the milling side and the refining side. As far as the milling side is concerned, we feel next year the revenue contribution from ethanol could be closer to about 40% of our total revenue from the milling side.
All right, Mr. Chaturvedi, it was a pleasure speaking with you. Thank you so much for joining us and explaining to us the dynamics of the industry and particularly for your company as well. That's the word coming in from Sri Renuka Sugars. But for now, we'll slip into a break now. On the other side, we'll put focus on Bharti Airtel, HDFC AMC and Phoenix Mills. They are reacting to some news updates and brokerage updates as well. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, markets are steady at this point in time, but a lot of stocks which are moving around in trade. So let's talk about them. Bharti Airtel is surging in trade as the company has introduced new, cheaper family plan to counter Jio postpaid plans. Reema Tendulkar is joining us with more details on this one. Reema?
Thanks so much for that. So Bharti has introduced a new family plan for 599 rupees per month, where along with one SIM, you get an additional SIM. So basically, if you are a couple and you need 2 SIM cards, then this is an attractive plan for you because it costs you 599 rupees postpaid plan. Earlier, Bharti didn't have such an option. The earlier family plan started with 4 SIM cards. And it was priced at 999. So higher price, but it gave you 4 SIM cards. But what if you didn't need those 4 SIM cards? Then Bharti did not have a plan available for you. This move by Bharti Airtel follows Reliance Jio, who last week had introduced some more family plans, priced them attractively, gave a lot of combination in terms of without OTT top-ups or with OTT connections. So Bharti Airtel is trying to counter that and make sure that they're also present in all the segments and at the price points available in the family space. Bharti has also introduced new, cheaper Airtel Black variants. Airtel Black variants are basically not just postpaid. In that, you've got DTH as well as fixed broadband. So it's a whole house connection that you get. And here as well, Bharti Airtel has introduced cheaper plans which are priced at 799 and 999. It's basically Bharti Airtel trying to be aggressive, stay aggressive in the postpaid plan, make sure that they continue to get subscribers and try and perhaps convert some of the prepaid subscribers into postpaid as well and counter Reliance Jio's offering. Back to you.
All right, thanks a lot for that, Reema. So that's about Bharti Airtel, up around 1.5%. But the other stock which is surging in trade today is HDFC AMC. After a large trade that took place, Vivek joins in with the details. Vivek, GQG exits.
Well, absolutely right. So in yesterday's trading session, over 2.2% of the total equity changed hands via a block deal. The likely seller, as per even the exchange notifications, GQG partner seems to have made a complete exit of their holding. So that's one particular overhang that's gone from the company. And even more interestingly, or in a more positive development, it's a single buyer that's picked up the entire chunk. That is SBI Mutual Fund. Now, along with that, there are a couple of important triggers that are worth highlighting as far as HDFC AMC is concerned, given the fact that this continues to remain a bit of an uncertainty. So Aberdeen Investment Management, in an exchange notification dated December 6, 2022, and remember, they hold almost 10.21% stake in the company. They have already gone ahead and taken a clearance for selling an entire 9.9% stake in the company to one single entity. So that continues to remain one particular development that we need to watch as far as HDFC AMC is concerned. Post which, according to analysts, HDFC AMC that was deleted from MSCI index will make a re-entry. So all of these triggers are something that, analysts expect to play out in the coming few months.
Okay, thank you, Vivek, for that. So HDFC AMC is surging in trade today. The other stock that I am tracking today is Phoenix Mills. It is in focus, trading in the green, up around 2.5%. This is after Motilal Oswal Financial Services has initiated a coverage on the stock. They say as of March, Phoenix, of course, we all know the company as a mall operator. It has 11 operational malls with leasable area of 9 million square feet, and they are expanding as well. So they recently bought a land in Surat. This is for developing a 1 million square feet mall by FY27. 7. And with this expansion, according to Motilal, the company will have presence in many of the cities. It will be 6 out of the top 8 cities and 3 two-tier cities as well. So they are going on an expansion spree right now. The company has reported a healthy pre-leasing of 90% of its malls already, and rental income, according to Motilal Oswal, should increase by 32% in terms of a CAGR over FY23, FY25 to 2,200 crore rupees. In terms of their retail and office assets, they are valuing it at a cap rate of 7 to 9%. They have hotel assets as well, something like a St. Regis in Mumbai. Those are valued at 15 to 17.5 times September 24 EBITDA. So they are quite bullish on the rentals, and both from the commercial mall and the rentals from their hotel property as well. Company has a long-term vision to add 1 million square feet of retail asset every year. So their expansion plans is something which will drive growth for the company, and that's why Motilal Oswal has a target price of 2,000. That's like a big target from the current levels. 1321 is the current market price. They also have a buy rating on the stock. Manglam.
All right, so that's about Phoenix Mills. The stock up around 2%. Those who live in Mumbai will obviously know about some of their assets, but increasingly they are expanding their presence too. Take a short break, come back. We talk about the market technicals with Sachidanand Uttekar. Welcome back. You're watching us here on Halftime Report. The Nifty around that 17,050 mark, pretty much in the middle of today's trading range, has been rather volatile, so to say, but the good part is that it has been in that range. So let's talk about, things in the F&O space as they stand at midday. The Nifty has been in this range of 1786 on the way up today to 1716 on the way down. So just a 70-point range. Will be interesting to see where it goes from here, given the FII long positions at just around 8.5%. But what's also taking place is that today's range has given a range for the option writers to be active as well. The 17,000 put at the lower level is seeing a fair amount of writing for a premium of 80 odd rupees, telling you that 16,900 to 16,920 is the first leg of support that the street believes would be at the lower level. On the way up, however, resistance continues. So 17,100 call writers extremely active as well. Almost 33 lakh shares being added in open interest for a premium of 70 rupees, telling you levels upwards of 17,150 could face some resistance. But remember, during events, ahead of events, what's most lucrative to option writers is writing a straddle, which is both a call and a put together. So 17,050, where the market is right now, is where the most active strikes are too. So if you just take a look at the 17,050 put, 25 lakh shares added in open interest for a premium of 109 odd rupees, and take a look at the 17,050 call. That has an equal number of open interest added in shares with about 90 rupees in premium. So combined premium at the 17,050 strike is 200 rupees, telling you that levels upwards of 17,250 and around 16,850 is the broader range that everyone's looking at. 16,850 near-term support, whereas levels upwards of 17,150 going all the way up to 17,250 would face some sort of resistance.
Okay, so we'll watch out for those levels and also get in our technical expert, Sachidanand Uttekar, who's the AVP Technical Equity at Trade Bulls. Sachidanand, it has been a volatile session, but at least we are stable at these levels. What are the charts suggesting, and what would your individual technical picks be?
Good afternoon, Sonal. Last Tuesday also we saw a similar kind of a setup wherein the Nifty was displaying a pullback. It was trending somewhere close to 17,200, and it was confidently trending below its 5-day exponential moving average. So even then we had the same strategy of selling these pullbacks, and I think that particular strategy still continues. If you look at the last 2 trading sessions, yes, we have seen a smart recovery on a daily basis consecutively, but Nifty has somehow not sustained above, or it has still not closed above its 5-day exponential moving average, which is placed somewhere close to 17,070. So as of now, if you look at the ADX, which is a directional momentum indicator, it is still placed in the negative zone when it comes to daily chart. And on the weekly, it has displayed a fresh breakout above that 25 mark. So we are expecting that the bottom should not be in place immediately. Probably it is too early to call it as a bottom, and we may see some more pressure getting built in. So the strategy still remains to be on the sell-on rise mode. Overall, until unless we don't see a sustained closing above this 17,240 mark, it is better to utilize all these pullbacks to create some fresh short positions. The level that we are tracking on the lower side now is resting somewhere close to 16,770, 750, which is the September series low. So as of now, I think it is good. It is a good idea to create some fresh shorts. The stop loss should be placed at 17,240 for our probable target somewhere close to 16,750.
And what would your individual technical bets be?
The pressure is evident in the metal pack now. Here we are looking at JSW Steel. It was maintaining itself well above that 680 mark. Now that particular support has also been breached. So we're expecting a further drag towards the 640, 650 kind of thing low. So fresh shorts are recommended here. The stop loss should be placed at around 672 from here on. The other pocket of weakness that has been identified is Voltas, where we have seen a fresh breakdown from a head and shoulder formation. If you look at the averages, they are displaying a negative crossover on the 5 and 20 exponential moving average. Plus, we have a strong Y addition indicating fresh short positions which are built in. So we are expecting this particular move to extend towards 820. Fresh short positions can be deployed in Voltas. The stop loss should be placed at around 858.
All right, Sachi, thank you so much for joining in and giving us your views on individual stocks and the index, using these rallies, mild rallies, as opportunities to short the index with levels closer to that 16,075 as a target. But with that, we move on. Sources tell CNBC-TV18 that Reliance Capital lenders will meet today to discuss the next course of action. Ritu joins in with more details. Ritu, the saga continues.
That's right, Mangalam, and the Reliance Capital case has really been shrouded in uncertainty because on one hand, you have the lenders proposing to consider a second round of auction, holding a meeting today, we understand, to decide on the date on the next round of auction. And on the other hand, you have the matter still pending before the Supreme Court, which is yet to decide on the legality of this second round itself. A plea that was filed by Torrent, one of the bidders, opposing the second round, declaring that it was the highest bidder in the first round and therefore it was illegal for lenders to proceed. Now that aside, the lenders, we understand, are going to set the base bid much higher this time around at around 9,500 crores with a minimum cash component of 8,000 crores as per the terms that we've been able to see, and they are likely to invite all of the four suitors to come participate again, and that includes Torrent, Hinduja, as well as a consortium of Piramal and Cosmea, as well as Oaktree. However, it is quite unclear if the lenders will still come forward to submit bids, given that the final outcome will still depend on what the Supreme Court rules in the matter. So like I said, a lot of uncertainty, but that aside, the lenders are hoping to proceed with the second round of auction and keeping their fingers crossed that the Supreme Court ruling will be in their favor.
Okay, all right, Ritu, thank you so much for joining us with those details. Important story, and of course, Ritu will keep getting you more updates on this one. With that, we'll slip into a short break. On the other side, we'll put focus on some more stocks that are reacting to news updates and some brokerage notes. Stay tuned. Okay, 60 points higher on the Nifty right now. We have the Bank Nifty too, which is surging up around 150 points. So yes, there is some stability in the markets as we speak. But a couple of stocks, as I said, are moving around. And in the Nifty pack, it's Reliance Industries, which is contributing to the Nifty gains that we are seeing today. It has seen the third positive report on the stock this week itself. And today it has come in from CLSA because they talk about how the stock has fallen substantially from the highs and now is a bargain buy. The Reliance stock, according to them, has seen a substantial down move. It's down 20% in less than 4 months. Reliance is now within 5% of conservative valuations currently. So they have a target price of 2,970 rupees per share, which is around 35% upside from the current market price right now. They talk about the big triggers that they are watching out for 2024. First is the launch of 5G smartphone, the $25 billion 5G foray that the company is doing. They also see a good chance of the Jio or the retail IPO coming out in next 12 months itself, and the big energy push or the green energy push that the company is making, the $10 billion bet. And that is something, these are some triggers for the stock going forward. So they say that yes, most of it has seen, most of the stock price has seen a decline, but now there could be some buying from current levels.
All right, so that's about Reliance, and if Reliance does bounce from here, we could see some bounce on the Nifty as well as its sheer weight on the index. The Reliance stock, as we speak, at the high point of trade. Nimesh joins in on a standout brokerage report. Nimesh, it is on city gas distribution companies.
You know, both the city gas companies are buzzing in trade on the back of the CLSA note, and that was a standard as well. On IGL, CLSA has upgraded the stock to buy now. They've sharply raised the target price to 585 versus 420 earlier. On MGL, while they maintain a buy, even on MGL they've raised the target price now to 1260. Now CLSA believes that the regulatory regime will become more favorable from April 1st, and there is a pricing power which is returning back to the city gas companies. So the formula which has been proposed to cap the domestic gas prices at $6.5 per MMBTU will drive a 24% cut in the domestic gas prices from April 1st. And on top of it, the CNG is still a preferred fuel, and most of the OEMs are pushing for it, which will mean a volume growth as well for the city gas companies. Now on IGL specifically, CLSA has raised the EPS estimates by 6 to 15%, and they believe the double-digit volume growth and pricing power is a rare and hence a big upgrade on IGL. On MGL, the target price has been raised largely on back of the PE multiples being raised from 11 times to 13 times, and hence they've raised the target price on MGL as well. But largely the big call is a big upgrade on IGL, and there they've raised the target price sharply now to 585.
Welcome back. Still tuned into Halftime Report. Steady as it goes for the markets. Nifty is up 60 points right now, and the mid-cap side of things looking good as well. So 90 points higher on that particular index, and the advance decline ratio in favor of the advances. So that is some relief rally that we are seeing in our own markets today. Some stocks from the broader markets that are moving around. Sterling and Wilson should come up for you on the screen because that one is up 9% right now. The 2100 crore rupee order that the company has won has definitely buoyed some sentiment. So up and away for that stock. The other one that I'm watching out for is Aarti Drugs. That's up 5.5%. This week itself, it's up around 23%. Yesterday, it closed higher by around 16%. So some follow-on gains on this one. Piramal Pharma, it has made a comeback. It's at 70 rupees right now. From the 52-week highs or the listing price, it's already down around 30. It's already down, and this year itself is down around 40%. So some buying in Piramal Pharma. It is at the day's high. Sequence Scientific too. It has been a laggard for a long time. So that stock too is seeing gains of around 5%. So yes, some buying that we are seeing in the broader markets, and it is led by the rally that we are seeing on the benchmark index as well, and the global markets, of course, is something that we are tracking for you. Asian markets also closed higher. So all in all, looks good for the market so far. Whether we'll sustain it or not is the key. That is something we'll be tracking. But for now, we'll quickly slip into a short break. And on the other side, our commodity segment will be here. Manisha Gupta joins with R.K. Jinamani, who's the senior scientist at IMD, to discuss in detail on the unseasonal rain and hailstorm happening across the country. Stay tuned.
Welcome back, and joining us on the show now is Mr. R.K. Jinamani. He's a senior scientist at India Meteorological Department. Mr. Jinamani, hi, thank you so much for joining us. And after the hottest month for the month of Feb in more than 100 years, March also has brought about various irregularities when you look at the weather right now. So with what we've seen in the past couple of weeks in sense of thunderstorm, hailstorms, very heavy rainfalls in various parts of the state, how are we looking at this week now, and what is the IMD latest forecast for going forward?
Yeah, talking about the, as you told, that for past 1 week, mainly the Chhattisgarh, Odisha, Vidarbha, Telangana, Madhya Pradesh. So they were having continuously the thunderstorm, hailstorm, and also the rainfall. And most, high rainfall has been over Chhattisgarh, Odisha. Odisha reporting up to 140 millimeter. Also Andhra Pradesh. Last 5 days, there have been very high rainfall, even Tamil Nadu also. So the rain belt one is very, central India, peninsular India, including Tamil Nadu, Telangana. And another is the hailstorm and sometimes strong wind also. Now coming to the northwest India, they were having clouding and some drizzle, but last 5 to 6 days. But yesterday the rain has been very high. Even Delhi also reporting, some 40 millimeter like Ayanagar, and heavy rainfall over Himachal. Uttar Pradesh has reported very high rainfall. So these also hailstorm all over northwest India, including Rajasthan, Haryana, even Delhi, day before yesterday, Palam reported hailstorm. Uttar Pradesh had a hailstorm over many places. So these weather, prolonged weather, almost all part of India at this period when we have the the Rabi crop, especially the wheat over Madhya Pradesh and this Punjab, Haryana, Uttar Pradesh and Rajasthan. So that period it is little, cause impact. But no doubt we have given, warning and monitoring from 12th of the March that this spell will be very prolonged. So that really happened. But thing is that this may be, in terms of the scale, it has covered a large part of India actually. So we are looking at the past data. I don't think we get such a large area up to 4 or 5 days or 1 week like it has happened over Chhattisgarh, Telangana, and particularly Andhra Pradesh. So maybe it is maybe once in 30 year or 20 year we have to look. And because of this, you see the temperature is 6 to 8 degrees below normal over a large part of India. If you see today's situation, the temperature is just 21 to 27 or 28 over large part of North India, including 28 to 35 over rest part of India. So temperature has been below normal. From heat wave, there has been a big respite, but in terms of the impact mainly on the agriculture, because the crops are in the harvesting stage. So this is making problem. But as I told that large part of peninsula, including Maharashtra, Western India, Gujarat, the dry weather started, sky opened up, and the Northwest India also opening up today. So all these areas will get a dry spell up to 3 days. And from 23rd night, we are getting another wet spell, but that is much lesser area, mainly restricted to North India, that is Rajasthan, again the wheat belt. So we are advising farmers to harvest the crop during this window period, during starting from today till 23rd night. So that will give a big, it will reduce the impact. So that is the scale we are working, and we are also updating the bulletin. Yeah.
Absolutely. So that is about March. Is there any visibility for the month of April right now, Mr. Janamani? And there are various reports suggesting El Nino and the consequence impact on a below normal rainfall this time around. Are we looking that ahead right now?
Actually, we are now only concentrating on, day-to-day or something like 2 weeks forecast. So as I told you that 23rd to 25, we have active western disturbance coming. That will mainly impact the North India. Temperature will keep low. And also part of central India and, like something Telangana, Bidar, Odisha, not ruled out. But after that, we must get some dry weather, and now Mercury should start rising from something like 26 March. But as we have a very, strong wet spell, so I don't think heat wave will come before, something like 5 or 7 April. I mean, it depends on how the systems are coming in first week of April. And coming back to the, larger perspective, we have repeatedly told that please wait. Why we tell? Because whatever, projection is coming, it should come with, what is the skill of those projections. We don't find any skill exist if you talk anything about monsoon prediction of 2023 before mid-April. So there has been a scientific, causes why we go for mid-April for the first stage of the long-range forecast of the monsoon, because the major thing is that the accuracy or the predictors themselves, did not get a signal, or we did not get an accurate signal till mid-April. So by mid-April, once we get a correct signal, what is the status of the El Nino or what are their prediction, then we will start talking about the monsoon of June to September. So at this stage, we are not making any projection or prediction.
All right. Mr. Janamani, I have one more question. Got point taken, sir. I have one more question. So while, of course, the monsoon we'll hear about by mid-April, but as of now, as you said, the temperatures have cooled off and we are below normal in many of the states. And you also said that another spell of rainfall will come in from 23rd to 25th. From that time onwards, are we looking at temperatures rising again?
I told already that whatever we see, it should be like that. But as the rain has been very high, so it will take some time, to get the temperature up to heat wave condition before something like, first week of April. But no surety whether we will have a heat wave in the second week or first week, because the way the systems are hitting, already we are getting another from 23rd to 25, for the western disturbance, North India and central India will be affected. Of course, the scale will be lower. You may not get such a large scale. Whatever happens over Maharashtra or peninsular India, it will be mainly restricted to North India. But we have to wait, as I told you, that, I don't think we can guess anything what will happen in the second half of April. All right, we have to again review it something like around 28 March to look into the April. Anyhow, right, our monthly forecast will come, I think, by March end, about April status also.
All right, Mr. Janamani, wait we will, and we will await your commentary, because everyone's looking at what you have to say about the monsoons, not just the people, but also, those who are trading in the stock markets as we speak. So we will monitor that. Manisha, thank you so much for it. Before we wrap up on this edition of Halftime Report, just keep an eye out in the markets. There has been a bit of a spike, and this is led by the banking end of things. HDFC Bank, ICICI Bank, Axis Bank, all of them have moved higher, and as a result of which the Nifty Bank has gained about 300 points, up closer to 1%, outperforming the frontline indices. Will the frontline indices follow suit now and go back to the highs of trade is something we will monitor. Just about 10 points away from today's trading high. With that, we'll leave you with a short break and come back. Business Lunch will take all the market action ahead. Thank you for watching.